Hi guys, Rahul Shire trying to make investing accessible and profitable for the average investor. Now today's video of mine is going to be about multi-baggers. Yes, a topic that everyone loves and not without reason. You see, multi-baggers are stocks that even if you have a few of them in your portfolio, every few years it's going to give you good long-term returns. Is going to give you a big boost to your portfolio over the long term, and which is why having a few of them or understanding the process of how to go about finding or how to increase your chances of finding the next multi-bagger is very important. This is exactly what I'm going to do in this video today. Using my experience of the past 1.5 decades, I'm going to lay out few principles, a few rules using which it will be easy for you to identify, or it may increase your chance of finding the next multi-bagger. Now before I proceed with my blueprint or before I proceed with my strategy, it's very important for you to understand what exactly I mean by multi-bagger. Now there is no universally agreed upon definition of a multi-bagger. Multi-bagger can be defined differently by different people, but for the purpose of this video, the definition of a multi-bagger is that the stock should go up at least 2 times over the next 3 years, which is a CAGR of 25-26%, which I think is perfectly reasonable. An average stock, the Indian stock market long term has given a return of 14, 15, 16% per annum. So if you're demanding a return of 25-26%, and if your stock is going up a minimum of 2 times over the next 3 years, I think that's a correct definition of a multi-bagger. Of course, the stock can continue to go higher. It can go up 3 times, 5 times over the next 5-6 years. It can even go up 10 times over a reasonable long-term period. But for a stock to be qualified as a multi-bagger, it should go up a minimum of 2 times over the next 3 years. Now, a service that I have been running at Equity Master for the past 7-8 years, there using the definition of multi-bagger, I have been able to identify around 14-15 multi-baggers over the last 7-8 years, which I think is not bad. These multi-baggers on an average have given return of 2 times over 3 years. Some have gone on to give 5 times in as little as 1 year. Others have gone up to 3 times over 2 to 3 year period. But using the definition of a multi-bagger, on an average there have been around 14-15 recommendations that I have made over the last 6-7 years, stocks which have gone on to become multi-baggers. 15 stocks out of the 46 stocks that I have closed in the positive. So every one stock out of the 3 stocks that I have closed in the positive has been a multi-bagger, which I think is a pretty reasonable ratio. If you're having a portfolio of say 25-30 stocks, and if 8 to 10 stocks out of those go on to give you a return of at least 2 times over the next 3 years, overall your portfolio is going to be in pretty good shape. So how did I go about finding these multi-baggers? What are the principles and strategies that I used in my service? Let's discuss that. Now, one thing that I've observed is that most of the multi-bagger recommendations that I have made have been recommended in the year 2014, 15, 16 or 17. Recommendations made in 2018 or 19 have not done that well. A very few of the recommendations I made in 2018 and 19 have gone on to become multi-baggers. On the other hand, a lot of the recommendations that I have made, or most of the multi-baggers that I have recommended, have been recommended in the year 2014, 15, 16 and 17. Now there is a reason for this. The reason for this is that 2014, 15, 16, 17, these 4 years, Sensex or the broader stock market was pretty reasonably valued. If you look at the average multiple, the average multiple of the Sensex has been in the region of 19 to 20 times over the last 25-30 years. So which means that if the broader stock market or the Sensex is trading at a price to earnings multiple of 19-20 times or significantly below that, it is a good time to be investing in multi-baggers. It is a good time to be looking around for multi-bagger stocks, because stocks on an average are reasonably priced. And the first thing that you want in a multi-bagger stock, or the first thing that I desire in a multi-bagger stock, going by my blueprint, is that it should be reasonably valued. So if you're looking for a reasonably valued stock, the broader stock market also has to be reasonably valued, which means that your chance of finding a multi-bagger will go up a great deal if you try to take maximum exposure to potential multi-bagger stocks when the Sensex is trading at attractive valuations. When the Sensex is trading at valuations of more than 22, 23 times or maybe 25 times, like it was doing in 2019 and most of 2018, 2019, early 2020, that was perhaps not a good time to be going around hunting for multi-baggers, because the markets were expensive and there is every possibility that your potential multi-bagger stock is also trading at expensive valuations. Therefore, if you have to increase your chances of finding a multi-bagger, first observation is try and see what the broader stock market valuations are, and if they are not expensive from a long-term average perspective, then try and hunt for multi-baggers. Condition number 2 is at least have a margin of safety of 50% when you're trying to invest in a multi-bagger stock. Now the rule that I use is, on an average, the recommendations that I have made, they have traded at a price to book value multiple. I prefer price to book value multiple for valuing stocks. So on an average, they have traded at a price to book value multiple of 1.4, 1.5 times historically. Therefore, unless the stock is available at a price to book value multiple of 0.8 times, 0.7 times, at a 50% discount to its long-term average, I do not invest in a stock. I don't think it worthy to be considered as a multi-bagger stock, because I want a big fat margin of safety. So unless the stock is trading at a price to book value multiple of 0.8 times or below, I do not recommend the stock to my subscribers, because I want a big fat margin of safety. And the reason I insist for this is because if the stock manages to live up to expectations, if it goes back to its long-term average, you're buying it at 0.8 times, 0.7 times, and you're selling it at 1.5 times, you're getting 100% returns or getting a two-bagger straight away. However, if for any reason it's not able to live up to its potential, if for some reason the EPS of the company was supposed to be 8 rupees per share but falls down to 8 rupees per share, and the stock does not go on to have a price to book value multiple of 1.5 times but settles at 1.2, 1.3 times, even then you have earned some kind of returns. So that's the beauty of having a big fat margin of safety. Even if the stock does not live up to your expectation, even if it slightly underperforms, you can still end up having positive returns. So that's criteria number 1. In terms of valuations, I want the stock to be trading at least a 20-25% discount to its long-term average of 1.4, 1.5 times. So that was about the valuation. Another condition I will look for is that the stock should at least be of average quality, if not the best quality. What I mean by that is the debt to equity ratio of the stock should be below 1 times, and lower the better. I do not like companies with high leverage, with high debt, because they are susceptible to a bad cycle. They are risky. They can lose you a lot of money if things don't go as per plan. Therefore, you should stay away from highly leveraged companies, and unless and until the debt to equity ratio of the company is significantly below 1 times, I don't invest in the stock. So that's another criteria that I look at when I try to invest in a potential multi-bagger stock. Another criteria on the qualitative side is that the company should have a good history, decent history of decent dividend payouts. It should be a consistent dividend payer. Dividend payout, according to me, is a great indicator of the quality of the earnings of the company. If the company has been consistently paying out dividends, it could be 15% of profits, 20% of profits, 25% of profits, does not matter. But if it has been consistently paying out dividends, which means that the earnings are not manipulated, there is a definite cash flow behind the earnings of this company. This company is generating genuine cash, and that's why it's been able to pay out dividends from that cash. So if it has been a consistent dividend payer over the last 3, 5, 7 years, 1 or 2 years of missing the dividends is fine, but If it has paid dividends for 5 of the last 7 years or 4 of the last 5 years, then and only then you can consider the company as a potential multi-bagger. So these are the major criteria I look at when I invest, when I recommend multi-bagger stocks to my subscribers. I look at the broader stock market valuation and try and recommend more stocks, more potential multi-bagger stocks when the broader stock market valuation is attractive. I'm sorry, excuse me. And second is, big fat margin of safety, and then those two quality parameters: low leverage, low debt to equity ratio, well below 1, and a history of dividend payouts. So if you follow these parameters, if you stick to these principles, then you have a very good shot of investing in a potential multi-bagger. If you make a portfolio of 20-25 such stocks in a year when the broader stock market is not that expensive, and hold it for 3 years, 2 to 3 years, I can almost guarantee you that some of the stocks from that portfolio are definitely going to give you multi-bagger like returns, and thus give a big boost to your overall returns. Now I'm going to share a slide with you where I have done some back testing and using the criteria that we just discussed in this video, and these are the stocks that came up, potential multi-bagger stocks that that I was able to come across. As you can see, there are around 15 companies, some of the biggest gainers, and the investment in these stocks have been made as of 31st December 2000 and between 2011 and 2016-17, and the last column is the point-to-point returns those stocks have generated. So like for example, Finolex Cables recommended on 31st December 2011. Of course, this is not an actual recommendation, this is just a back test. If you had invested in Finolex Cables 2011 and held it for 3 years, you would have made 760%, huge returns, huge multi-bagger returns. Sonata Software again 2011, 496% returns. Kalyani Steels 344%. Garware Technical Fibers 335%. In those last few stocks from the year 2015 and 16, look at HEG. It has been a huge 20-bagger in 3 years. If these are all the stocks that have been shortlisted using the criteria that I just discussed. Low price to book value, low debt to equity ratio, good history of dividend payouts, and these are the kind of returns that these stocks have generated over a period of 3 years. So do try out this method. Start using it for a small part of the portfolio, if not the entirety of the portfolio. It has a very strong chance of working out if you do your homework right, and if you follow all the principles that I have laid out for you in this particular video. And I'm sure that you will not be disappointed with the result. Now this approach is in stark contrast to what a lot of people out there do when they invest in multi-baggers. They try to project the earnings of the company, they try to invest in high growth companies, or they look for the next sunrise sector when it comes to finding potential multi-bagger stocks. But those approaches I think are high risk approaches. They may have a decent upside, but the downside is also huge. Therefore I try and stay clear of those approaches. The approach that I prefer is the one that I have discussed in this video, because if you are right, there are very good returns for the taking, returns of the magnitude of 2 times, 3 times, 5 times as you just saw. But if you are wrong, you do not lose a great deal, and that I think is should be the key highlight, or that should be key element of any stock picking strategy, is where you are right, the upside is good, and where you are wrong, the downside is not that much. So yeah, that is how I go about searching for multi-baggers, and maybe you can start implementing it for a small part of your portfolio. So that was all from me today. Do keep sending in your feedback. It really makes me happy seeing your feedback. So do keep sending in your feedback, and I'll see you again next time. Thank you so much.
Want to discover 3 super small cap stocks that could potentially soar sky high in the next few years? Then click here to register for my Super Small Cap Summit right away.